Hi, you guys. I'm Phil Town from Rule One Investing. Today, I want to discuss if you're missing out on a sweet deal by not investing in an IPO. So 2019 is one of the big years of IPOs with a bunch of really high-profile companies going public in the past few months. The question on people's minds is, are these companies worth the investment? So let's talk a little bit about what an IPO is, some of the most recent IPOs, and whether or not you're missing the boat on buying Lyft or Uber or Snapchat. So what's an IPO? An initial public offering, IPO, takes place when a private company goes public. That means when their stock becomes available to the general public to trade on the stock market for the first time. And when a company is private, the sum of its stock is typically held by just a few owners of the company. And that stock is not available for purchase on a public stock exchange. And to own the stock in a private company like that, typically you're going to have to be uber rich. After an IPO, though, shares of the company's stock can be bought and sold by anybody. You don't have to have any qualifying amount of money. In some cases, IPOs can be very high-profile events, okay? This year, we've already seen several major companies go public for the first time, including Pinterest, Lyft, and Uber, and more. When well-known companies like these become available to purchase on the stock market, a lot of people start thinking really like, I'm gonna jump in and buy them because they gotta be a super deal because they're just gonna go up. So they start reaching for their wallets. But are IPOs really worth investing in? Or do they present more risk than reward? Great question. So number one, there's no denying that it's exciting to see a well-known company like Uber just suddenly became available to purchase, right? Particularly if you love Uber, you use Uber, like an awful lot of people do, right? So in most cases, however, IPOs don't make good investments, and here's why. All right, to start, most IPOs are priced in a way that it's almost impossible to figure out whether they're worth it or not. Like taking Uber, for example, it's going out the gate at some price X. The company loses money like crazy. So what do you think the thing is worth? I mean, how do you figure out what's a reasonable price to pay for something that has no history whatsoever of earning any money for anybody? In addition, most IPOs are experiencing a steep downturn in this market after their lockup period expires or even immediately after the IPO. Again, Uber dropped like a brick and so did Lyft. You might even remember Facebook, which has turned out to be a great investment, went down over 50% after its IPO. So during an IPO's lockup period, a company insiders sign an agreement that says they will not sell their shares in the company until a certain amount of time has passed. Now, once this lockup period is over, though, many company insiders rush to sell their shares, and that drives the price of the company down in the process. Now, more important than all of this, though, is the fact that it really is hard to analyze a company. It's really hard to figure out as the company is coming public whether it's really valuable or not. This is partly because most of these companies have not been marketing their products long enough to have any real historical data. When we invest in a company, we want to be sure we understand everything there is to understand about it. And most particularly, we like that long track record to see what happened to this company during the last recession. We kind of follow this advice that you don't know who's swimming naked until the tide goes out. Well, when the tide goes out in a recession, we get to see who are the strong companies under pressure and who are the companies that are folding up their tent. So we just don't want to invest until we've seen a company make it through a major recession. So I like to call this knowing what I don't know, right? I don't know what I don't know. Well, I want to know what I don't know. And predicting how a company is going to learn to perform in the future when you have no past performance to analyze, that's like, I know I don't know. And it's incredibly challenging. I mean, way over my head. Rule number one, investing dictates that it's best to purchase companies that have been around for at least 10 years. And I like to see 20. Most IPOs fall massively short of this benchmark. So if you're considering investing in an IPO, you should still try to analyze the company using the 4 M's, right? You want to know the meaning, moat, management, margin of safety, If you can't answer all the questions in getting to understand that business with a lot of confidence, then it probably isn't a good investment for you right now, no matter how famous it is or how much you use the product. For example, it's difficult to say whether or not a company has good management when that management team has never led the company when it was public under all of that public scrutiny. It's even more difficult to determine whether a company presents a margin of safety when it's too new to the market to get any sort of ability to figure out its value. So even determining if the company has a moat is really challenging in an IPO, since publicly traded companies face a different kind and a different level of competition than they did when they were private. Why? Because now everybody can see their numbers and they're gunning for them if those numbers are really good. So now none of this is to say that IPOs are bad companies. They're not necessarily. After all, every company on the stock market had an IPO at one point in time. It is to say, however, that investing in a company right out of the IPO gate is typically not a great decision. If you're excited about a new company and you think it's really worth investing in, hey, it's okay. There's no harm in putting it on your watch list and waiting for a deal. Just be patient. It will come around to you. Simply sitting on the sidelines for a little while and observing a new company's performance on the market, that can really help you make a far more informed, long-term 10-year decision than you would be able to make right out of the gate. Use logic and reason here and not emotion. I love it. But now I'd love to hear from you. Have you ever invested in an IPO and how did it go for you? And I know I'm just going to hear from those of you who made a killing. All right, fair enough. Send them in. And leave a comment below with your answer and I'll be sure to follow up with you guys. And thanks for watching. Now go play. If you enjoyed this video and you feel it was valuable in teaching you more about investing in IPOs, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen for a free gift. And thanks again for watching.